Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's conversation. I'm absolutely thrilled to have with us today Gracy Chen. She is the CEO of Bitget, which is one of the largest global crypto exchanges. And we're going to have a fantastic conversation. Gracy, welcome to the podcast.
Thank you for having me. Hi, everyone.
Let's start with how you got involved with Bitget, kind of what brought you into this industry. What's your background?
So the first time I heard anything crypto related was obviously, like many of us, Bitcoin. So in 2015, when I was a TV host, I was introduced to Bitcoin by some of my TV network friends. And they said, Gracie, you should check out crypto, specifically Bitcoin. That time, I think Bitcoin was only traded around 300D. And look at where we are today. So I began by reading the Bitcoin white paper and was instantly hooked. I actually studied applied mathematics for my undergrad degree in Singapore, National University of Singapore. So as the mathematic, background, young adults, I just loved the mathematical beauty in Bitcoin. That was like clearly written in the 13-page, very clear and simple Bitcoin white paper. So I was excited by also how democratic this system could be. I was drawn to the way it's established, this new decentralized ledger that very much criticized a little bit, but not exactly the white paper, but very much criticized and complemented the traditional centralized financial industry. So I started to look at not just Bitcoin, but also Ethereum and XRP, and that's the only three cryptocurrencies that I bought in early days. I also later invested in some crypto startups, including something called Bitget, which is later rebranded to Bitget Wallet. By that time, when I started to know Bitget team, Bitget was still Bitget. It's a decentralized independent wallet. So in spring of 2022, some of the Bitget team reached out that said Bitget was recruiting for a managing director whose role is very much like a CMO. And they asked me if I know someone. Then I immediately volunteered myself because I did have 7, 8-ish years background in marketing in Web2 world. So I decided to join Bitget in 2022. And that was 3 years ago, 1 year ago, actually 1.5 years ago, when the previous CEO of Bitget stepped down. I was also approached by the board whether I want to take that role as the CEO. Then I said yes. So that's where I am today.
That's an amazing journey. I want to dive into a couple of parts of it. But before we do that, for some of our Western audience, can you give the scale of Bitget? Like, what's the transaction volume per year? How many users does it have? What kind of products does it offer? Just as an overview.
As a centralized exchange, people look at typically users and trading volume. And also it can be loosely divided into centralized exchange or decentralized exchange. And the centralized exchange, there are spot market and derivative markets that we are serving specifically. So in either way of spot or derivative, Bitget is typically ranked top 5 in terms of total trading volume globally. For example, I'm looking at CoinGecko and CoinMarketCap, which are two data aggregator websites that many people look into. So right now, Bitget is ranked top 6 for the centralized exchange spot market volume. And for the derivative, it's 8th, but typically we are top 5 again. The volume right now, the 24-hour volume of Bitget is about 10 billion. Again, this volume number ranges by day to day. we have 24-hour volume to typically fall into 10 to 20 billion USD. That's the total amount of trading that's happening on Bitget, one of the best exchanges, including liquidity and coin offerings, as well as volume. Together, Bitget is, we mentioned earlier, Bitget Wallet, which is how I was introduced to the team. So today, Bitget has centralized exchange component, which we call Bitget Exchange, as well as decentralized wallet, where Bitget Wallet, earlier Bitkeep, are serving. So in total, we serve 120 million users on these two platforms. Bitget Exchange users are all KYC'd, while Bitget Wallet users, just like the MetaMask wallet and some other decentralized wallet, those users may not be KYC'd. But in total, it's a huge amount of user base that we're looking at here.
I don't know if these numbers are exactly correct, but maybe they're directionally correct. Compared to Coinbase, the volume that I see on CoinMarketCap is about half the size, but I'm sure that fluctuates. And in terms of people at the company, there's a little bit more over 2,000. Is that right?
Yes, we have 2,200 people just on the centralized exchange side.
And then in terms of how you think about your operations and your customers, where is the concentration of that volume and those users coming from geographically?
Geographically, slightly more than half of our users are from Asia, East Asia, Southeast Asia, even South Asia, or all sorts of like Asian markets. But in terms of growth, we see a lot of growth in Europe as well as Latin America. Right now, the approaches of all the exchanges are historically important in terms of some exchanges are heading the offshore way. Some exchanges are more heading to the fully compliant way. Some exchanges are trying to find a balance in between. And of course, strategy shifts when there are especially clear regulatory frameworks coming out in certain markets. For us, we were mostly viewed as an offshore exchange serving the global market, meaning whichever market that we don't have license, but there is a clear framework. For example, the US, we tend not to serve. By the way, we do not serve the US market. But moving forward, our strategy is more towards the compliant way. Because in 2025, we just thought that the global the global crypto market is more and more related to the full traditional financial market. So moving forward, you have to be compliant and you have to be able to provide the services in a compliant way, as well as to, some enterprise level kind of B2B service that's gonna really bridge the gap and bring crypto to the mainstream. Serving the very small niche, crypto native users was our previous approach. But strategically, we think we want to be the bridge for more mass adoption. So geographically, we are also developing a lot in especially Europe under MiCA. We are applying for license. We want to serve that market fully compliant. And again, strategically, we are more heading towards the more mass adoptions, RWAs, UEX, which we can definitely chat more into. UEX stands for Universal Exchange, by the way.
I want to spend a little bit more time on kind of the early days and then the consumer profile or the behavioral profile of the users, and you have this fantastic marketing background across entrepreneurship in China. And if you kind of roll back the time to, let's say, 2018 through 2020, can you paint a picture of who are the early adopters of crypto? Like, why are they doing it? Why are they trading it? And maybe crypto or fintech solutions in general, like 120 million users is a very large footprint. If we rewind back to the early days where you're kind of still having to identify what people want, Tell us about that initial spark. Like, what are the personas of the people who are early users and in your career you targeted?
Just to highlight, I joined Bitget in 2022. Before that, I wasn't that involved in the crypto space other than being an investor holding some cryptocurrencies. But I did have another interesting background, maybe very relevant to what you are interested in, which is in 2016, the first startup after my journalism career, very short journalism career, I had, as we mentioned earlier, a long experience in Web2 startups. The first startup that I co-founded in late 2015, so it's 2015, 2016-ish, that is a fintech company. And it still exists today, serving lots of freelancers to provide them with fintech B2B service. Sorry, actually 2B2C service. We can talk about that slightly more later if that's relevant. But basically in 2016, I started to build in fintech already. And I guess that's another reason why in 2022, when I joined Bitget, although I don't have that much crypto specific experience, but I did have a few years of fintech startup experience and get to know how this world works. So back to your point, in terms of co-founding a company and find that product market fit, I think that's probably the most important thing that a co-founding team should focus on. Today, this is an issue still in many crypto companies, which rely too much on narrative, different, layer 1, layer 2 solutions, ZK, TE sort of technology, not necessarily on very appropriate product market fit. Like, who exactly are we serving? What specific needs are we serving? But that's different in Web2 world. There isn't much room for narrative speculation in Web2. You either make it or you're gone, right? You have to be able to identify your users and provide a top-notch user experience for them. So that's something I learned, although quite naive, but very important lesson that I learned in my early days of startup.
So why is that naive, first of all? And then what does narrative speculation mean?
Why is it naive? Because as a startup, in my humble opinion, as a startup, you have to solve a solution and you have to solve a need. It has to be a need, not even something people desire. So feasibility, viability, desirability of your product is so key in a startup. For example, on very day one of my startup journey, I look at there's certain tools like a link Canva, a business plan Canva. Either way, whatever framework you use in the entrepreneurship 101 kind of class, it doesn't really matter which framework do you use. But what matters is you have to look at who is your user. What's the current solution? What's the pain points? How do you make money? Things like that. Again, in my opinion, very naive. But when I entered the crypto world, I noticed, especially in early days, the ICO age, maybe it still work in 2022, 23 kind of bear market when some projects are building, and maybe in 24-ish, the early bull market. But if you look at 2025, it doesn't really work anymore. Even if there are tokens who may perform okay or even well, but it's short term. If you don't have fundamental value, if you are not generating, real utility, you can pump and dump your token price, but you can't do that sustainably in the long run. There are some recent launch of very highly expected layer 1s and layer 2s in the past few months, but many of them in terms of the token price, is not as high as early days. It even falls under their private market investment. Some VCs complained about this a lot. I think for the past 1 year, many crypto industrial people, including projects, VC, asset managers or even exchanges feel it's just harder and hard. It's even more and more hard and harder to get users, hard to make money. And in my opinion, you will just become even harder if you don't have proper product market fit.
I'm definitely interested in opening up the market structure question because I think it's been a drag on markets and projects and so on. Let's go back to that question of like, there's not one persona of a target client for a crypto exchange. But if you could paint a picture of like some of the clumps of the types of people that were being targeted in the early days that were adopters.
I think early days, if we're talking about as early as 2018 that we just started off, many of the users are highly speculative. They may even consider exchanges or trading crypto more like gambling, especially if they are trading, for example, meme coin. Meme coin by default or by definition doesn't have utility, doesn't have fundamentals. But there are definitely hypes and speculation and expectation built in, especially when there is some celebrity kind of involvement, governors, officials, people like that did a lot of meme coins this year. So many people come to crypto for those kind of more gambling or speculative point of view. And then in 2022 or let me take the 2022 to 2024 era, for example. That's when we see, exchanges like FTX fell down and then ETF when approved in January 2024. So this is an interesting period of time that the market had a lot of shuffling. What I mean by that shuffling is also relevant to Bitcoin price. 2022 to 2020, 2020 to 22, that kind of last bull market, the highest price of Bitcoin was around 65K. Today, it's 85K, 88K, changing and moving. But basically, it's not that different in terms of Bitcoin price. It's a 30% up run. But the shuffling happens in this 4 or 5 years because there are a lot more early retail users sold Bitcoin. And then a lot more institutional users, ETFs, pension funds, Wall Street, DATs, digital asset treasury, these kind of users become the new holders of Bitcoin. If you look at, again, to be more specific, MicroStrategy, I think today holds about 3% of the total Bitcoin supply. That never existed in 2022. MicroStrategy wasn't adapting a DAT strategy in that early days. ETF, IBIT by BlackRock, etc. All these ETFs holds another few, single-digit percentage of Bitcoin. So that's what I mean by the shuffling of the market structure. And for exchanges, we are still serving mainly the retail users, but our institutional and organizational kind of volume went up a lot. Some of them are market makers, so not necessarily the end users, but we do see a shift from pure retail user, more speculation, to today a more matured market structure, have a good balance between retail and institutions.
So on the retail side, what's the average account size and how does a person find out about Bitget? Like, what are the marketing programs that put the brand in front of them and onboard them? Like, what are some of the flows by which people were brought into the exchange?
So market, in terms of account, it could be quite different if we look at, again, VIP clients and just retail users and then institutional clients. So it could be as small as, $100 USDT, just, in a single account, just purchasing some cryptocurrency. It could be also as high as multi-million or a few dozens of millions on average for some top tier VIP clients. And then for institutional users, Many of them are market makers, but there are also family offices, VCs, hedge funds who open account with us. And given that we are going for a more compliant ways in certain markets, I think that market structure will also shift a bit in those markets in terms of when you are more compliant, then definitely more institutional clients and more large tickets feel comfortable of putting their money with you. Then back to your second question, how we onboarded our users. This is definitely a combination of a few activities. It could be offline events that people learn about us, mainly crypto native, but sometimes we go to a fintech conference, we go to even certain not finance related, for example, maybe this education conference or event that we want to onboard high net worth individuals, etc. So it could be offline events, it could be online campaigns, it could be through some sponsorships and the spokesperson that we have. For example, in late 2022, a major campaign that we had was through Leo Messi. I actually signed Leo Messi up before the World Cup in 2022. And that's obviously a very good bet that before he won the championship, or he and Argentina team won the championship in the World Cup in 2022, it's much cheaper to sponsor him. And then that sponsorship started in 2022, ended in 2024, and we had a few other sports partnership, including La Liga, etc. So sport partnership is definitely another one. Media activities, the conversations like what we are having right now, hopefully can introduce Bitget to some users who may not know us and build some trust. And other than just simple marketing campaign, I also want to highlight that after 2022, when people think about exchanges, they definitely want to look more into security and protection, mainly because of FTX. So people will not just, blindly see, okay, they offer the best fee structure, they have a lot of coins available, the user experience is okay, then I just want to use it. They want to make sure that their money won't be commingled. They want to work with only the top exchanges. And I think that's one strategic move that we did in 2022 that kind of separates us apart from smaller tier 2, tier 3 exchanges. And one of the turning point for us is that we establish a lot of security and protection methods. For example, we have the second largest centralized exchange protection fund, which is Bitget Protection Fund. Today, 600 mil set aside in open wallet where people can check. So they know you are a big exchange. And when anything bad happen, for example, a hack, although we've never had any major hack, but if some users' funds were stolen or were lost due to not their own fault, we can use the protection fund as an insurance method to accommodate them. And we also publish proof reserve, Merkle Tree proof reserve on a monthly basis, be very transparent about users' fund, not commingled, set aside every individual. You can check that. Things like that are more and more important in terms of building the trust and onboarding users. So just something interesting that I think worth highlighting other than pure, outgoing marketing campaigns.
Gotcha. Yeah, I mean, the reason I'm asking is in part because there is this distinction between Web 2 and Web 3 customer acquisition, where in Web 2 fintech, people take really deliberate ways to grow their business. It's like, okay, if I'm trying to bring in an account that's going to have $1,000 balance, then that $1,000 balance might be worth $50 in revenue per year. And the net present value of that might be 300 for a customer lifetime. And so my customer acquisition cost to get that 300 worth of value is going to be, I can pay 250 or 150 to get that 300, right? And we see from all of the neobanks that have launched over the last decade, like we've seen the numbers. We know that it can cost anywhere between $10 to $50 per user to acquire a neobank user. And then, profitability in the early days was challenged. So there was lots of kind of conversation about, can you scale up to 10, 20, 30 million people? And if you do that, is it even going to be profitable on the margin in terms of lifetime value? That's the type of conversation that I'm familiar with on the Web2 fintech side. And then on the Web3 side, and I was the chief marketing officer at Consensus, and our MetaMask wallet grew from 250,000 users to about 10 million users. Now it has about 100 million users. And we were never really able to get down to the unit economics of a Web3 or a crypto user. Like, you couldn't really spend $10 in ads and then know on the other side that you could have somebody that was using your app and that you knew you were commercializing somehow. So part of what I'm trying to get to with the question is, when you're running like an industrial scale exchange like Bitget and you have this enormous user footprint, like, do you feel like you have control over user acquisition through the sort of like financial approach, or is it much more you do heavy brand marketing like you described through partnerships and so on, and then the brand marketing is really there and the rest is organic interest in the crypto assets and people sort of just like discover you?
That's a very good question. I'm glad to know that you had this similar background, that this all those numbers makes more sense when we're discussing them. You're right. Actually, sometimes we do rely. So it's a good combination of the brand marketing than the more financial driven kind of marketing. So the previous examples were mainly brand marketing, and you are right about that. And then in terms of the more financial data kind of marketing, there are a few metrics we look at. Number one is when it's a online campaign through a third party like Facebook or Google, it's slightly easier to capture what's your investment and what's your return. And that also varies a lot in various markets. So how we work is we do have very specific 15 sort of different teams globally, and they each cover a market jurisdiction wise, so that they know that specific market better. How I, as a CEO, I look at the specific data in that market in terms of on a yearly basis, how much we are spending and what's the user base, what's the new user base, what's the total trading volume, what's the trading volume per user per month, what's the DAU, what's the daily average asset, number of KYCs, etc. So all these metrics. And we kind of adjusted along the way. But when we decide on the budget, it's very much like, I have a specific budget set aside, and then you guys can decide how you want to spend the budget at this local team. Because in certain countries, they just can't do online marketing. And then there are certain countries that the barrier is not about marketing, the barrier is on-off ramp. So they may, and then in certain countries, it's the VIP clients driving the user base or the growth rather than pure retail. So they might need to do more VIP targeted, small scale, face-to-face events. So this can be very diversified in each jurisdiction, but how we manage the whole company and work together is we have this organizational structure that is more like a matrix. So each individual local team, they have their own PR team, they have their own event, they have their own product team or product support. And this small little team, they both collaborate on the horizontal line, maybe to the local leader. And then for the vertical line, they may also report or collaborate with the global team of product, global team of marketing, global team of technology, etc. So the local team actually has a lot of power over the specific activities that they drive.
I think from an organizational design perspective, like you have to be very on the ground. So exactly what you're saying makes sense. One more question on this, just because for me it's kind of infinitely interesting, is that in parts of Asia, the investing behavior it's a lot more speculative, and you mentioned kind of hyper gambling and meme trading than like asset allocation or more conservative approaches that you see in the West. And then there's also the concept of like key opinion leaders. Like I feel like in the US and UK, you've got financial advisors and you might have, like talking heads on TV, but you don't really have KOLs in WeChat group or Telegram groups that are coordinating investing behavior. Can you talk about that cultural aspect of how people interact with crypto as well?
So yes, we do work with KOLs a lot. And most of the cases, we give KOLs a rebate of the volume of the profits that we are earning, which is very typical of how not just crypto, but the world interacts with the KOLs. And again, this decision, we also rely on our local team, especially they need to make the connection, maintain a good relationship, solve their problem if there are any, not just for the KOLs, but also for the users that they brought to us. So KOL marketing is a very typical way of exchanges increasing their user base as well as their volume. We see the speculation, you're right, that more from Asia, but also in terms of new token launch, that's like listing different cryptocurrencies. That's a good way of bringing new users. One advantage about Bitget is we actually have a pretty good balance between offering new tokens, but not as many as some other exchanges who may have listed already like 3,000 tokens, not to mention pump the fund kind of business model where 1 million users can 1 million different cryptocurrencies can come up suddenly. We do have about 700 cryptocurrencies available on our platform, much bigger or much a bigger base than, for example, Binance and Coinbase, which have about 200-ish. So there are lots of users who probably can't find certain tokens in other platforms and they came to us. So when we are listing a new token, that's another way of onboarding users. And also KOL marketing, they also like to promote certain tokens which are available on you exclusively. For example, one major token that's launching this week is Mona. Mona is available in Bitget, but not on Binance and OKX. So many of the Asia users who may have all these different exchange platforms available and they want to trade Monad, they typically will choose Bitget because it's available on us, but not on some other platforms. And KOLs will promote that as well.
Got it. Okay. Yeah. So it's kind of like a version of affiliate marketing, but with local communities. I want to revisit the market comment you had before around the sort of like market structure between venture investors, early token investors, and exchanges over the last 2 years that has put some pressure on the whole model. And, in particular, sort of the caricature of this is that, venture investors are bidding up tokens to really high private valuations. Then these tokens launch on exchanges and then they do poorly and it sort of just like sells off. And post-launch, investors have a bad user experience. And so I feel like there's been like a really weird and not super constructive feedback loop between exchanges and pre-launch investors and retail. What do you think can be done to, or what has been done to improve this dynamic? And, are there good and bad examples that you've seen?
Well, I would divide this question into maybe two dimensions. One is if we still focus on the current more crypto native market, how to strive this balance between all these different market structures so that there's a win-win-win situation rather than a lose-lose-lose situation. Typically among three parties that I want to highlight, which is exchanges, crypto projects, and users. if we are looking at a new token listing. And then the second dimension that we can dive deeper into later is probably if we zoom out a little bit, crypto native sort of tokens is an existing market. Is there any other market that could be valuable for us to tap into that it's not necessarily a more zero-sum game, right? So that's, I think that's two ways of looking at this question. If we look at the first part, the first dimension, still focus on crypto market specifically, what we are trying to do, for example, through our listing team and operational team, is that when we launch a token, we try to get a small percentage, usually less than 1% sort of their token available from the project to airdrop or to do launch pool for the users, together with a lot of marketing campaigns to drive the awareness of this token and trading behavior of this token, so that there are more users who can know this project, can interact with the protocol. Of course, if it's a meme coin, if it's a layer 1, layer 2 project, or if it's a GameFi project, the kind of interaction can be very different. But the goal is to bring value to the projects, as well as users can get value because they can get airdrop, they can do launch pool, and then as an exchange platform, we create this win-win-win situation.
Selfishly, from an investor point of view, especially like institutional investor point of view, at what stage is it reasonable to participate?
If we are talking about angel investor or even KOL round of investor or VCs, by the way, I also did some investments myself as an angel. I think for the past few years, 2-3 years, most of the projects that we invest in, and I'm pretty sure this is not just me, not sure if you feel the same, but definitely lots of VCs or angel investors will feel it's just very hard to make money. Most of the projects are actually losing money. And I think a key thing there is the altcoins kind of pricing is very different from early days. You have to, again, have a very strong product market fit and a very dedicated team building on that. And then you can have a high token price sustainably. Again, pure speculation and just narrative. Even, this project invested in by A16Z, sort of like very good, fancy background, Harvard, MIT grads, not necessarily work anymore. So as an investor, I feel it's quite hard to make money, probably not worth the effort than just holding buy and holding your Bitcoin. Sorry to say that, but that's just how I feel economically, financially in this cycle. But another way is also, for us as an exchange, we want to zoom out and think about globally what are some other opportunities that lies ahead. I think there are two that I'm personally very interested in, and Bitget exchange or our ecosystem partners are very interested in. One is stablecoin. Another one is RWAs of, for example, US stocks, tokenized US stocks, tokenized commodity, tokenized forex, etc., that we are also building on as a platform. Because cryptocurrency, those 700 altcoins that we offer together with Bitcoin, Ethereum, is what we started off with. But today, with very good infrastructure around RWAs, we don't necessarily need to only offer altcoins. We can offer US stocks, tokenized US stocks. We can offer tokenized forex, which for us is the part of the growth assets that we are looking into, and may also have more long-term sustainable value, especially many of those projects like M7 in the US do have very strong fundamentals and very strong trading volume. Yeah, so that's another market we're looking at to offer to the crypto users, meaning not necessarily just trade cryptocurrencies, altcoins, but also RWAs that they can look into.
All makes sense. My last question will be, of course, about the future of Bitget, and I'll ask it through the lens of product development and product preferences. And I think we started talking about buying spot, so owning large crypto coins, right? Bitcoin, Ethereum, and so on, and just purchasing it and holding it. And then the markets evolved into derivatives, which largely are perpetuals in crypto. And then there is the whole sort of swath of DeFi opportunities across lending and yield and stablecoin yield. And you've mentioned tokenized stocks as well. Market makers have very successful businesses around exchanges. Going forward, what are the places that are drawing the most consumer demand? And I know that tokenized equities are very interesting as a new product line, haven't quite scaled up yet, but there are product lines that have growing demand today. And so what do you see as the things that your clients are most likely to adopt over the next few years?
Again, we talked about some of them already. By the way, I think for examples like tokenized US stocks, although the trading volume of US stocks on Bitget is not as high as the altcoins or cryptocurrencies in general, but it's also growing very fast. I think we just passed 20 billion in terms of total trading volume over there very recently. So that's just a number that was zero about a month ago. So the growth there is quite strong. And also we see some other competitors like Binance also adapted the tokenized US stocks yesterday. So some other competitors are also picking up for this specific asset class. And it's, again, not just US stocks. It's a lot of other traditional financial assets we are looking into, which is a multi-trillion market by default. And in our opinion, many of those assets can be tokenized. Many of the current traditional structure, when it goes to cross-border transactions, when it goes to supply chain, fintech solutions, when it goes to the current stable coins used in smaller countries, and then when it goes to maybe 2B kind of services, are all thriving and has a lot of opportunities. But also we need to know that these sectors, it's not like very sexy, fancy, quick money kind of project or sector. It's actually like running a marathon. You really need to build a strong team, provide very good UI, UX to your either B customer or C kind of end customer. Either way, you have to run a marathon and be, just step by step, build something there. It's not about telling a story and like rocket launched. At least we don't think that way. Moving forward, anything that has strong product market fit, really can make money solving a pain points. That's where we are heading to as an organization. So those examples like stablecoin RWAs, 2B services actually makes a lot more sense for us moving forward.
Fantastic. Thank you so much, Gracy, for joining us today.
Thank you.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things FinTech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.